Let's talk today about mortgages. And with us is Reece Cohen with Atlantic Bay Mortgage. This is going to be one of 3 different videos that we're going to talk about mortgages. So hang on. So good day, Reece. How you doing?
Hey, I'm great. Thanks for taking some time to talk mortgage rates in the real estate industry.
Yeah, I think it's a very, very hot topic today. So if you can explain to us the different loan programs and how it impacts rates.
Okay, great question. So there are different loan programs out there people may have heard of. They're jumbo loans, which are loans that come in above $806,000. Then you have what are called your conventional non-jumbo Fannie Mae, Freddie Mac loans that are less than $806,500. You have FHA loans, VA loans. So all different types of loan options are out there, and each one of them, the rates can be a little different. For example, most people think because you go with a jumbo loan, you're going to have higher rates. And that's not always the case. Sometimes the jumbo rates or the jumbo rate options are the same or better than the standard Fannie Mae. So that's a perception that's out there. A lot of times people say, well, I don't want to do FHA because that's not a great type of a loan. It's a government loan. But in general, FHA rates are lower than your standard conventional rates. And what really impacts your payment is your credit score. So with FHA, having a lower credit score isn't going to impact your rate as much as a conventional. So a lot of times that is a better program than a regular conventional loan. And then there's VA, USDA, all different types of options.
And I can tell you that I'm getting from Reece every week on Friday, I get what are the rates of the week. So that really keeps me updated, and this is how I can update my clients as well. So if you want to go on that list, you can do that as well. You can just message Reece after that because he's going to be tagged on this, so you'll be able to contact him as well. And just another thing is, if you can give us some practical tips for locking a great rate in today's market.
Sure. So in this market, it's not very stable, I guess. It's higher than people got used to a couple of years ago. But before I talk about locking in a rate, I do want to talk about the market trends overall. So 3 or 4 years ago, people were in the 3s, the 4s, etc., and you got spoiled. Well, that's not a typical market. Historically, the average interest rate for a 30-year fixed over the last 50 years is about 7.75%. And guess what? We're less than that now. So people need to get used to what the current environment is and not a small snippet in time that, again, we all got spoiled with, and people want those same rates. Well, that's not going to happen.
Will we see those rates again?
Maybe, but probably not in this next generation. But I don't want to say never. Will we see the 5s? Will we see the 4s? Very possibly. But are we going to see the 2s and 3s anytime soon? That I don't think so. And hopefully there's not another pandemic that brings that out again. But that's what kind of prompted rates where they were for those generational low rates. So we've got to focus on what we have now, and the big thing to focus on is the equity you're going to build. Equity in your home is a lot more important than that interest rate, because the longer you wait, the more equity you're going to lose in not buying now.
100%. Well, stay tuned because we're going to have part 2 in a couple of days. So great to see you, and thank you so much, Reece, for being with us today.
Great. Love to share.